Good morning, good morning, good morning, everybody. The screen is Steve down with the Cheat Code family here. And today we are going to be going over a couple of great things when it comes to trading. We're going to be going over some risk management. My man SJ is going to come on. He's one of our phenomenal traders here at Cheat Code and focuses primarily on risk management. Trading is a beautiful thing. We always want to make some money, but if you don't appreciate and focus on how much you are willing to lose in that trade and make sure that it makes sense and not going to stress you out, then you're going to lose in this trading game every time. So we're going to get started here in 2 seconds. SJ, you ready to rock and roll, brother?
Um, I was going to ask you if you can go ahead and start off, and I'm gonna come behind you. I know you said you was going to show yours.
Not a
I was going to
problem.
come behind you because I'm still doing something right now. But now I got you.
Nah, no problem, no problem. And it's more so talking about it. I mean, you definitely can definitely show your screen because I definitely love to see how you chart and trade and such and how you perform your risk management skills. But I'll definitely get it started. And I know exactly what you're gonna say, so it's like I can go over it, but I love to have that interaction with our
Yeah, me and
family.
you pretty much. I think me and you, when you be talking, I trade the strategy you be talking.
Yeah, yeah, yeah. 'Cause, we see it. We see it.
Yeah,
We see it. Let me go over. This is the setup I was playing with last night. Because even when the market is closed, I'm still on these charts, watching and going over, and I'm doing naked charts. Then I put my lines on and everything else. So, but as far as risk management is concerned, and we was talking about this in mindset earlier. We all want to see the play, and make a bunch of money. And a lot of people don't focus on how much they're willing to lose because they just assume, all right, they told me to trade. They told me for this, and this, do this, and I'll make money. And they don't think about nothing else. That's all they think about. When in actuality, it's the last thing you should be thinking about how much money you're going to make. The first amount is how much money, if this doesn't go right, and this doesn't do exactly what it's supposed to do, how much am I going to lose and where am I going to put this stop loss? And that's what we're going to focus on today, right? So we're going to focus on that risk management. So I have a 50K account, right? And most of the evaluations, whether some people are doing 25K accounts, 100K accounts, or whatever the case may be. Now, for these accounts, like for my particular account, if I'm doing an evaluation, I have to make 3,000 without losing $2,000, right? So I have to break that $2,000 down to say, okay, I can't lose 2,000. Well, I got 50K. This is a 50K account. If I was a real 50K, how much am I willing to lose per trade? So one of the general rules that I've learned in this game is trade no more than 2% of your, well, lose risk no more than 2% of the entire account. So when we do that, 50,000, 2% of that is $100, right? So that means I only have $100 risk that I'm willing to play with, that if this goes wrong, $100 is my limit. Okay. So when I structure my trades now, I have to make that my main focus. When I get my entries, whatever my strategy is, where I get my entry at, where's my stop loss? Okay, now my stop loss can only be $100, right? So how much I'm willing to risk? It all depends. I don't care how many, we're going to do futures and we can go over options as well. But I have to focus on that specifically. So I'm going to remove my drawings, right? And I'm going to show you guys and make sure that I don't need the MACD for this. I'm gonna make sure I have everything I need. I do. Okay, great. So I want to go over, even though I missed it, I want to go over this drop that happened this morning. Okay. And we're going to implement that exact $100 loss. That's all we focusing on right this second, right? The $100 loss. I'm gonna go over risk to reward and everything else, but I'm gonna focus on the $100 because I want y'all to definitely see that. So now what I like to do is I take this ruler here and measure out where my entry is and where my stop loss is going to be, right? So for me, my particular strategy, I like to use the Oliver Velez strategy. Some people know it, some people don't. That's fine. Where on when the 17, the 20 EMA, I use a 17, but the 20 EMA is slanting down. We're going to use this particular play. It's slanting down. We're looking, and price action is below the EMA. We're looking for a green candle, and when that green candle gets taken out by a red candle, we enter the trade. And for me, the stop is above that green candle. So that being said, I want to measure when those green candles come in, I want to be measuring them to see how many ticks they are. So I'm using NQ. So each tick is worth $5, right? So I'm gonna take my drawing tool and I'm going to measure these candles, right, as they come in. So this is the 6 and 17 cross. I want to see the price action now below the 6 and the 17. I like that. I'm measuring these green candles. This green candle is 30 ticks. Okay, cool. So I'm already set. If this thing is worth 30 ticks, right, or right above 30 ticks, right, from the bottom to the right about there, about 30 ticks. Yeah, let's say 30 ticks to round it off. Is about 28 ticks, but I'm gonna take 2 ticks. If each tick is worth $5, that's 30 times 5. That's $150. So now that's a little bit over my strategy, right? So if this candle is that, then I can't take the trade. Now it's 150. I can't take the trade. So what I do instead, if I go down to micros is 50 cents per tick. So I'm going to get as many ticks and as many contracts as possible that will equivalent to $100 in micros. So I can still play the trade when it shows itself, right? So what I do is, let me go to my paper trading real quick. Okay, so in paper trade, let's click on trade, right? So right here, I'm gonna do a sell, right? Because we're underneath here. And I said, well, 30 ticks, right? So 30 ticks. So 1 unit, 1 contract, and 30 ticks is $15. So I'm trying to get this area right here, $15, to where it says almost 100, as close to 100 as possible without going over 100, right? So I already know 15, 2 will be 30, 3 would be 90, right? So if I did, and that's, no, 3 would be 45. I'm bugging out. 6 would be 90, right? So let's see if I do 7. How much is that? 105. Am I willing to risk that $5, or am I going to do 6? I'll do 6 and $90. So now I know I'm not going to go over that $100. So I'm going to do 6 ticks. I get to be in this trade, right? Okay, so the next candle, right, is another green candle. It never took out that green candle. So I'm going to go, boom. That's 30 ticks as well, right? So the ATR probably is about 30 at this point in time during the night, during this morning at 8 o'clock. So we're gonna go with that same 30 ticks, right? So now I'm gonna draw my risk and reward, bar. Here we go. I just got a phone. I just got a text message. I'm sorry, y'all. And I'm gonna put it above for my stop loss, right? It says 27 ticks, right? I'm gonna enter right under here. So that's 29 ticks. I'll give it a little 30 there. Let me add the 30. All right, there's 29. Says whatever. For me, I usually do at least minimum a 1-to-1. And I do that because what happens is, from my experience and my back testing, I can do 2-to-1s all day. I'm not gonna get a high win rate with the 2-to-1. I'm gonna get a decent one, maybe a 70, 65, 70% win rate, and that's gonna be phenomenal. For my income, the 1-to-1s come in damn near 90 something percent. And I'm like, wow. So I can make, and I have a goal of like, say, $300 to $400 a day. I can take these 1-to-1s all day or 3 times, 4 times, and I got a 90-something% chance of winning, I'm just gonna take that and have a good day. I'll be done in like 20, 30 minutes on this 2-minute chart. Now, I have my stop, I have my stop loss set, and if it hits it, cool. If it don't, we riding. And once it gets to 1-to-1 and passes the 1-to-1, then I'll pull my stop down to right around that range. If it keeps going, then let it go. And as you can see this morning, it went, right? So not to say that you just have to take it as soon as it hits that 1-to-1, but you don't want to lose. Once you get the 1-to-1, you don't want to go back to negative, right? But if this didn't work out, like as soon as you got in this trade, it just bounced back up and took you out, you only lost $100. You got up to 2,000. You're not going to lose 20 trades in a row. It's not going to happen unless you just really don't have a strategy at all. And that's a whole nother subject that we'll talk about another time, creating your strategy. But if your strategy is a strategy that wins at least 50, 60%, and your risk of reward is whatever you choose to do it, whether it be 2-to-1, 3-to-1, 4-to-1, that's up to you and how you want to play it. But everything is the same when it comes to your stop loss and your risk management. You want to keep it minimal where it doesn't stress you out if you lose. And at 2%, like I said, with this 50K account, $100, I'm not going to lose 20 trades in a row that's going to blow my account. Now, if I just went all willy-nilly and just put, whatever, $200, $300, $400 loss, then guess what? If I did a $300, $400 loss and five losing trades, my account is gone. That fast. It's going to take me 20 wrong trades in a row to lose $2,000. That's how you save your account. That's how you keep your account. So whether you got a $10,000 account, $20,000, $100,000 account, you got to keep those losses minimal. And at that same time, it keeps you on a clear head because you're not worried about it, because it's going to take a lot of losses to hurt you. You can actually be relaxed and let your trade play out, and you will actually win more. Does that make sense to everybody?
That's good stuff.
Okay, cool. I just want to
Yes.
make sure that y'all with me. Y'all with me. And this money adds up, right? Because I know Jeff was talking about it. So I'm trying to make at least $300-400 a day, right? And by using the method I am, it's a very simple method of just taking the 1-to-1. Sometimes I get it in one trade, but at least taking just the minimum 1-to-1s, I'll be done. So let's say $300 a day. Oh shucks, $300 a day, and times 20 days in the trading month, that's $6K a month. I know Jeff was talking about $3K a month, but $6K a month is really, really nice, isn't it? I don't know. Y'all could use extra $6K a month, even if it was $200 a day and it was $4K a month. Hey,
I could use 6K.
you use $6K a month, cool. I mean, if you want to do 500, then a day, that's cool too. That's $10K a month. I mean, it's not too bad, right? But this is stuff that's structured, right? You structured your loss, you structured your take profit. You now when you add on market structure, knowing where you're getting in, where you want to get out, possibly where this thing could go, following the bigger time frames. Now you're putting more edges in your favor to make you more money faster. So, and now because we're not worried about the loss, we can focus on, okay, where's this going? Okay, cool. Let's sit back and see what happens. And most times than none, if you're working with us, you're gonna get there. And we had some serious call outs, man, on Thursday. It was crazy. Oh, this week it was bananas, and we was all in alignment. So any questions on the risk management aspect on it? SJ, I want to definitely get your input on it if you are ready, before we move on to anything else.
Yeah, that's no problem. That's the reason why I wanted you to go first, because you're more technical. I don't consider myself too much of a I am a technical trader, but I'm a little off from being a technical trader. So my way of doing things is a little bit different,
Mhm.
I have
but
a
I go
question.
by the.
I'm sorry, I have a question. Steve, SJ, please forgive me for interrupting you, but I don't want
No,
you to
you
get it.
cool.
Okay. Steve, could you please, very quickly, if possible, walk through how you know exactly when to enter? I know you heard green take out red or red take out green, but I didn't fully understand it. But I know
No
if I hear
problem. No
time, I
problem.
will.
Not a problem. All right, so the strategy in itself, what's this? I'm gonna take this off.
They see you.
No. And it's recording. My daughter just wanted to say hi, everybody. All right, so I'm gonna show you a couple of different times. Okay, so once price action is below the 6 and 17, we're pretty much going down, right?
Yeah.
So for my entry, I'm looking, it's very simple. And I know I talk about this all the time. If we're going down, and we know it's going down because price action is showing us that it's going down, right? It's on this downtrend. Any green candle is more than likely going to get taken out by the red candle because it's going against the grain, right? There's a bunch of people running this way, and they're running from a monster or whatever, and one person is trying to go against them and push through and say, "Oh, I want to see the monster." And everybody's like, "Are you crazy?" And what's going to happen? That one person is going to get trampled over by the crowd of people running away from the monster, right? So in this essence, that's the green candle is that one person trying to go against the crowd. Then the crowd comes and swoops them up and say, "Man, you coming with us." And the red candle takes out, the minute that red candle takes out the bottom of this green candle, right here, we're in the trade,
Got it. Got
right?
it. And you have to
And
make sure that price action is also below the 6, which it should be under the 17 as well.
it should be under both of them, correct?
Okay.
Now, I can show you this a million times. See what
Steve,
happened here?
real quick, do you use this on stock options swings as well, or only for you do too?
Anything, Bitcoin, futures, crypto, anything. This method, and it's just the thought process of the psychology of how the market works, and it works quite often. I'm going to say all the time, but quite often.
And I remember back in the day, you used to do the crossover and then the pullback. You used to wait for the consolidation and the pullback, remember?
I still do, because it happens all in one shot. That's the best part about it. It happens all in one shot.
So the green candle's the pullback that you wait for. So in
Yes,
essence,
ma'am.
it's the same thing.
It's the same thing. It's the same thing, and I'm just waiting for it. Boop. Now, if it's already in trend,
Yeah,
I'll catch any one of them. It don't matter the difference to me. I'll catch any.
Yeah.
If it's in trend, it's another way to get back into the trade. Like, say we missed this one, right? There's a
Yeah.
pullback, boom. Then here goes another pullback here, right? The green
Yeah.
one right here. Green gets taken out. Look at that big red candle. Wait, we're
Yeah.
not done. We're not done. Look at this pullback. 4 in a row,
Yeah.
right?
yeah.
Guess what happens? Green gets taken out. What happened? Boom. Wait, green gets taken out. Boom.
Yeah,
Now look, this is when it didn't work, right? Because we're coming to the end of this trend, right?
right.
So we're not gonna know. This green gets taken out. It goes down a little bit. You had a little bit of profit. There was a little bit of profit in here. Let's see how much ticks that was, right? And I like it to be close to the EMAs, right? At least my 6, I would still take it at the 6. This is not too far, but it's getting a little bit away from the 17, but that's life, right? But even so, this was 24 ticks down.
Steve, you
Right.
always 2-minute, and do you always play on the 2-minute, and do you also stay in for more than one candle?
Yeah. Now, sometimes and that's going to my risk reward ratio. If I'm trying to make my money fast and get out maybe $200-300 a day, I'll do the 1-to-1, because most times than none, I'm going to get a 1-to-1, and I'll just get out and have a good day. And other than that, I'll say, all right, let's just follow. I see the big plays. I'm looking at the bigger time frames, and I say, oh, this thing looks like it want to go up. I can get in on the 2-minute and then just let it flow. And I know I'm going to get my 1-to-1 or more. Now that'd be hard to hold sometimes, but it works quite often.
Do you ever go to the 1 minute?
Sometimes. But
Got it.
with this strategy, it works on every time frame. Actually, I can go to a weekly and you'll be like, oh shoot. And it works all the time, right? Sometimes do it work every time? No, but it works more times than it don't. That I can promise you. You're gonna make some money. And you know why you're gonna make money? Because even if you took 2 ticks, that candle has to break. If that candle breaks, you're in profit. Is that not weird? Like if that candle breaks, if this green candle breaks, if you put your candle, your stop, your sell stop right here, the moment it breaks, you're in profit.
Yep.
Yeah.
The moment it breaks, you're in profit. You can say,
So-
look, I
so-
want a 1 tick profit. I want a 1 tick profit. It's going to break. It's got to break for you to get into trade.
So if you see it retracing back though towards your entry point, do you at least get out at break even, or how do you
Nah, I let
manage
it.
that?
I let these candles play out. Like I'm not gonna do the 1 tick, 2 ticks. Now I can do
Yeah.
like during the daytime. I can do like you know, with my 10 tick stuff. I could do 10 ticks. Like yo, as soon as this breaks, I want to also have a take profit of 10 ticks. I'm probably gonna
Mhm.
get that almost every time.
Yeah.
Almost every time. Now watch this, right? This candle, the next candle, this one broke on this candle. The next one came up. Did it get above above the candle where it broke? I'm only losing 1 candle here.
Right.
It never came. Guess what it did? It went back down. Let's look at every green candle here. So let's take this green candle. You missed this one. Let's say this one. This one is good enough, close to the 17 and the 6, right? 17 is still sloping down, right? Or the 20, whatever you want to use. Candle, instant gratification. This is that instant gratification, right? Let's see how many ticks that was. 40, 50 ticks. If you're in NQ, that's $250 in 1 candle in 1-2 minutes, right? Even this green candle right here, right? This one went down to 30 ticks, right? Some of them, I'm looking at every green candle right in here, right? This one went down 30 something ticks. It's not going to happen every time. It's just a high probability. It's a high probability. On the other side, 617 crossover. You could take that. I should have took this trade. I'm gonna go over all of this too. I wanted to show y'all a lot of stuff that I see on this 2-minute chart. A lot of different patterns and stuff that we can go over. This pullback here. Now we're taking once we got above the EMAs, right? Now we're looking at green take out red. It's green took out red here. Next candle, push up. Green took out red here. It didn't last long, but there was some money in there. So, you know, like I said, it doesn't work on everything, but that's how I play it. And my stop loss is above the candle. I mean, well, and below the candle that I got in on. Not below the candle, below the red candle here. So this goes up, this breaks, cool. My stop is below here. Now, when this happens, when price action, actually, this is actually an engulfing candle. I might put my stop below that engulfing candle because it got below this one. So I might make this my low. Either way, it's going to be about $100. No
Do
matter
you
what.
use EMAs? Do you use EMAs?
EMAs,
Okay,
but it don't matter. It don't make a difference. It's going to work on EMAs or SMAs. It's going to work. But that's just, and this is, you know, you can use this for scalping, but if you see the bigger trend happening, you can stay in the on a bigger time frame. Like if you see the hourly overbought, you say, oh, this is at a supply zone. This is looking to come down. And you start to see things like this and then get the EMA crossovers. Now you can go play that strategy and run it down on that hourly. It's a high probability that it's going to go down. But, you know, that's just, you know, looking at the multiple time frames. And we're going to definitely, like I said, go into all of that. So SJ, I'm sorry, man. You know, I know that was a little lengthy.
No, you good.
You know, just giving
What's
them a
your
little.
EMAs, Steve?
Oh, mine's a 6 and 17, but this is, you can use the 20, the 8. You can use, you know, pretty much whatever ones you want. You can use pretty much whatever one you want. But yeah, SJ. So you do yours a little bit different, and I want to please explain to me how you do yours.
Well, I want to say from the beginning, though, when it comes to risk management, it comes to each individual. Each individual risk management is going to be something different. Everybody's person, you know, everybody who they gonna have to determine what they want and what they willing to lose. So that may be different from each one of us. That's the first part of risk management. But I'm gonna get to the trading part later. I guess let me see how I want to say this. It's easier for me to explain it like with options and anything else, but what I want to say about futures is, do any one of y'all know y'all daily tick? Like when y'all go in trades, what is y'all normal amount that you get every time? Do y'all know that number? When you go into a
I would
trade,
say
yeah, when you go into a trade, what's the typical number that you always get? Do you know that number? Are you just hoping for ticks?
I guess if you don't, it's time to get one.
Yeah, you gotta basically know that number so for you can be able to grow. Whether it's 10 ticks, then you consistently work on 10 ticks until you can consistently with 10 ticks, then step up to 20, 30. But you gotta know that number first to even grow to a certain point that you want to grow. You need to know what you want to use as the ladder to grow before you taking your steps up. Like with me, my goal is 250 to 300 ticks. Once I'm past that, I just let the charts take me where it goes. I take what's given, but my goal is only 250 to 300 ticks. But I had to get to that level. I worked my way up. First it was 10 ticks. Then I started noticing I was getting 20, 30 ticks.
Hmm?
Then I'm like, okay.
No, hold on. It's not dry yet.
So you got to know that number, especially if you got an eval account. You figuring if you know that number and you got an eval account and you know your average trade when you get into it is 10 to 20 ticks, you can subtract, okay, say you got the 25K account. That's 1,500 they want you to get. How many tries do you want to get that amount? Are you aiming for more? Those are numbers that you really need. Me personally, I know a lot of people say stop loss. That's another reason why I wanted Steve to go first. I'm a little different because when I trade off the 30-minute in the lower time frames. I like to trade the trend. So, and I'm gonna show y'all in a second, but I like to trade the trend. So when I go and snipe, my snipes are normally 50 or more ticks, maybe 100 or more. So I know a lot of y'all are snipers. Y'all in and out. I don't do that. I try to ride the trend. And you can pretty much see the trend. And I guess I can try to show y'all this and see if y'all can see it yourself. Maybe y'all can understand a little bit better. And
Oh yeah, I'm gonna let you share the screen right now. Whenever you're ready, you share the screen. I love seeing your snapshots of your charts. I like how your chart is set up. So definitely share your screen and you just follow your ways. Cause I know you say you don't use the stop loss, right? And you go for
yeah, that's the reason why I wanted you to go first. I have
right.
a mental stop loss.
Mhm.
I have a mental stop loss. Depending on what I'm getting in NQ or CL, I know NQ has a tendency to come back 20 to 30 ticks. So I'm prepared to lose 20, 30 ticks.
And
I know most of y'all have y'all stop loss at 10 ticks, 15 ticks, and sometimes tighter than that. That's the reason why it comes back and hits y'all to stop. And it's kind of hard it's kind of hard. But see, I'm a more of a trend trader. So when I get in, I try to pinpoint my entry and try to ride the trend. I'm trying to share my screen. It's saying host disabled sharing
My
screen.
apologies. Let me do the advanced. Let me do this right now. And all participants, go ahead. You are good to go.
All right.
But to get to that 20, 30 tick stop loss, you had to build it over time, correct?
You said what?
To get to that 20, 30 stop loss, you had to build it over time.
Yeah, but yeah, I guess you can say that's why I said each individual is different. That's why I say each individual is different. You gotta be, I'm prepared to lose that for a bigger cause, but I don't tend to lose that whatsoever. I'm just prepared to lose it. I don't want to lose that many ticks. So when I get in your entries is also your most important. Your most important. You get a perfect entry, then you don't have to worry about it. Like, can y'all see this chart, Mark? Well, I'm
Yeah.
glad y'all can hear me because I'm sharing off my computer, but I'm talking off my phone.
Yeah,
So
we can hear
you
you clear, and we can see everything. We can see and hear you good.
This is a 30-minute chart. And I use my EMA strategy on my 30-minute chart. Any one of y'all can use your own EMA strategy. They all work. Everybody's strategy work. But this is what I consider on the 30-minute. This is a 30-minute block. As y'all can see, we've been in the block since the 28th of CL. It came to the top of the block. Now came back down to the equilibrium, which is the middle. You see the 200 was right here. So it took it back up. But if I was in
Uh-oh, SJ, we lost your voice.
y'all hear me?
Yeah, we can hear you now.
Yeah, if I was in a trade and I was coming down here, my EMA is crossed right here. This is a 30-minute block. If I was to took a trade right here, I'm just going to show y'all just for my EMA. Just the road, if I wrote it here, that's 104 ticks. Just for my EMA crossed down from the 30-minute. And I was gonna ride that down to the 200. That's my snipes when I snipe, or my trades. I'm on the lower time frame also. Here we go once again. I could have took this trade right here, bounced off the equilibrium, all the way and rolled this all the way up here. Now, always looking to the left, I know because I play level to level. I just see how everything moves in the level and the pattern. And this is the 30-minute block. And this is how it moves. Everything moves on the block on the wave. It's bounced, try to break down, couldn't break down. Now it's trying to break back up. Now I know, for example, it has to break this level. If it doesn't break this level, it's coming back down. Because that's what it needs to do to get up here. So I know that for sure. So if I was in a trade, if I wasn't in a trade, I would be watching it right now. Push play. It went up. Couldn't break the block. Now I'm watching it. You know, Steve, with your EMAs, whether it's the 613, I'm watching it right here. Right now, I'm preparing myself for, I'm looking at my RSI right here. It's crossing down. I'm prepared to take a trade down. Let's see. Hold on. Nosh, let's see. Now, if I stop right here, if I do the measured move, where did I get in here? That's 83 ticks.
No, CL, that's a lot for CL.
Hey, I have a question for you. So
Mhm.
when you get your cross on the 30-minute, do you go down to the lower time frame to try to
Yeah,
look for a
yeah,
setup in
I
the
do.
in the lower? Okay.
Yeah,
What is it, the 1 minute you go to, or 2 minute,
I
5
use
minute?
the 1 minute and the 2 minute and between the 1 and the 3.
Okay. Okay. Nice.
But you start on the 30?
Yeah, all right. This is what I have to say. I want to say this. This is about day trading, period. The trend is the 30-minute block is our board game for a day trader. There's no need to be outside on the hour block or the 2-hour block or whatever block until this half an hour block is broken. You can see it travels in this, it travels in a range for days. We was in here for days until it's two things is going to happen. It's either going to break up to the upside or break down to the bottom.
You
That's
don't
it.
hold after the close, do you? Because the thing about CL that I noticed, because I trade it too, is that a lot of times after lunch there won't be much movement at all, and so sometimes I'll just avoid it. Do you ever have to hold it after the close from one session to the next, or?
No, when normally I get in the trades in the morning around 6:30, 7:30.
Okay, gotcha.
And sometimes it be later on in the day. It all depends on how the day go. But I can get in a trade and pretty much hold it and catch the whole ride and just ride the trend based off the 30-minute block and the lower time frames. Once I'm on the 30-minute block and I see what the 30 minutes doing, I go to the lower time frames and just follow it up with my EMA strategy. I just follow it up.
Okay.
So if my EMAs are crossing down, if I see right here it's crossing down, when I go to the lower time frames, I want to see all my lower time frames pushing down with it, and my EMAs and everything pushing down with it.
Okay. I trade CL, but I only do very short scalps, typically 10. Right now I'm getting to the point where I'm getting 20 ticks consistently, but
It could be, let's see. I don't know why I did that, but hold on. Doesn't matter which one. Trying to see why I didn't switch over to NQ.
Where you talked about like dad can't really listen to all your music. That's a lot of time. I don't like bring this to my soul. Yeah. But and then so like what? Do you think he listens to the album? I think he know which ones to skip. As soon as he hear
Hey, Steve, can you mute Daryl?
Got him. Yeah, sometimes we will push a button.
Oops.
Yep, I've done it a million times.
SJ, would you mind going over like a couple of trades, just getting into them and out of them so that we can make sure we have solidified what you do, the same as Steve? if you're up for it.
Okay, this is a different chart. I got different stuff on different charts.
Now that NQ, you can always go over that NQ. A lot of us trade that NQ, so we can go ahead.
Same thing. This is a 30-minute block as well. You see NQ came to the top of the block. And this, let's see, how long? Let's see. From like the 24th, it's been traveling in this block trying to get to the upside. See, it made a temp here, came back down, try to come up. Now it's trying to move its way back up. Now, let's see, push play. Well,
Sorry.
if you see right here, I got my RSI is pointing down. So I think this is probably like a bearish diversion too, also in a 30-minute. As you can see, it's been already, when it hit this block right here, it was already working its way down. I got a possible 1348 cross to the downside. That's approaching. Now, I can go to the lower time frame. Let's see. Now, if we go to the lower time frame, anything we already know, anything under the 200 is considered bearish. I really want, let me see what the 5-minute, 15-minute look like. All right. I can see right here on the 15-minute also that everything is crossing down to the downwards. My EMAs already crossed right here. So me personally, I go down different time frames. All right. I got a 1348 cross also that happened on and then here I go right here. So I seen it on the 30-minute. It already happened on a lot of smaller time frames. Now it's about to happen again on the 30-minute, but it's happening on the 25-minute. So I already know we going down. Now, I could choose to get in right. It's hard to say because it's not live, but I'm just going to hit sell just because I know it's going down. I wouldn't have got in normally like this because I would have had to find a moment on the right time frame, but I'm just showing y'all the 30-minute already told me we was going down. And I got my 13 cross. Steve always talked about his cross. And when you get these crosses on a higher time frame, that's a good sign. On the smaller time frames, when you get the cross, they play out quicker. But anytime you get them crosses on a higher time frame, is a good trade. Let me just
Absolutely. Because now you can play your fast trades based on that.
Yeah. Now look what happened.
Wow. And that's 25 minutes at a time. So you really could have sat in that.
Yep. That's crazy.
And that's how you pass the combine.
Facts.
So that's why I say I kind of trade different from everybody else. I use the 30-minute block to find out where I'm at and where we at. Look at this.
It's crazy. It tells you where it wants to go. And that's how you just read in the
Look at
chart.
my EMA just pushing it down.
Yeah. Right into the zone. And you know, supply and demand zones, they like to go back and forth, like bounce back and forth from each other. They're always looking
Now I
for the
got a
next
death
zone.
cross right here.
Hmm.
Now we're in an equilibrium. It could bounce back up. I know that.
Right. So now if you want to, you can move your stop. I know you don't have
Yeah,
no stop.
no, I can't. I probably would like right now. I'll probably be like right here. If we
Okay.
can make it here,
Then
I'll
you'll
close
do it.
my trade out. But I'm already in profit, so I'm willing to lose this, all of this right here.
Right. You already passed where you wanted to go
Yeah,
anyway. So at this point, you're like, it's whatever. If it gets back here, I know it's a high likelihood that it's going to try and push back up, but we ain't taking no more. But if it continues to consolidate and break down through that equilibrium, then why not stay in it? That makes sense to me.
So I'm sorry, did you say if it retraces up to retest that yellow EMA there and that FVG as well, you would,
no,
okay, it
I'm just saying
didn't,
me.
but you would have stayed?
Yeah, I'm saying me personally. I'm
Mhm.
already see how much profit I was already in. I'm prepared to lose this because I'm already cool with the profit I had already.
Right, okay.
So I went if it went down, came back to here, which it didn't.
At this point now, where it's at now, like it's
Now
coming
at
back
this
up.
point, I'm right here with it.
Yeah, that's what I'm wondering. You brought it down on your mental,
Yeah.
as far as your mental. Because me, I'm looking at that fair value gap. If it breaks the top of that fair value gap, that big red candle, I would say, all right, I'm gonna get out if it gets there, or past your yellow line.
Yeah,
If it starts
which
pushing
is my
past your yellow.
50, which is the 50 EMA.
Yeah, once
Well,
it gets yep. Makes sense to me. If it get past that 50 EMA, then we might have a problem.
So SJ,
huh?
I'm down with holding the trade, and like you said, you're following it to the 50 EMA right now. When you first started holding the trades and letting it draw back a little bit, how much psychology did you have to work on, like on yourself, to not be mad that hey, I let this thing come back X number, or were you just always from day one just like hey, I'm good with losing $300 if it means I can make
Nah,
1,000
it was
on other days.
It was me always looking at my EMA strategies, and I was always like a swing trend trader. When I started trading futures, it was a little different for me, hard for me because I was more of a trend swing trader. So I would pass the evals every given time, but then fail. I would pass like say that the target is 1,500, I'll make 3,000 and pass like real easy. And then on a drawback, I would lose the account. You know what I mean? So it would just be like, yo, like at first I was getting mad, calling them like Apex, like, yo, I've been past y'all quota. Like, what y'all closing my accounts for? It was like the drawdown. They wouldn't take, so I had to learn to get around that drawdown, especially because I had a whole bunch of contracts at one point. That's why y'all only see me with one or maybe two contracts. Y'all barely seldom see me with. I know y'all see everybody else with like a whole bunch of contracts, but me personally, because I ride the trend, I can only afford the whole 1 or 2 contracts because the drawdown would get me.
And for those who are listening and don't know, when SJ does these 1 or 2 contracts and rides these trends on these trending days, they go bananas. Yesterday was a phenomenal day for the brother. We're not going to talk about, the money, but it was a lot of money. And off of small amount of contracts. He didn't have to have 10 contracts, 20 contracts in options nor on futures. On futures, he might do just one contract, but because of his strategy and letting it ride, it equivalates to what if we were to do 20 different plays, trying to get a couple of ticks here and there. and then we would have to win on most of those trades to get the money that he got on one trade. So what he's saying makes a lot of sense. And I try to hold him too, but the mindset is really, it was a great question, brother, about the mindset and the psychology you have to have when you're doing these things.
Now,
Because
I want to say something too.
yeah.
Just
We
close the
all
book.
say we see our strategies, right? And this the part I had to accept. I back tested my EMA strategies. And I would have been on. I'm just talking to y'all. So that's the reason I'm not paying attention to the chart. But I should have paused it too, because I would have showed y'all when I would have got ready to got back in. Let me see something.
I was just
But
curious how your EMA stays so close, because mine don't. Yours are very close together.
what you mean?
Like, is 200 on there?
This the white right here is the 200.
So it's all abundant. So I know you have the 13, the 48, and the 50.
Yeah, well, the green one is my 13, the 48 the yellow, and if you see these little red dots on top of it, that's the 50. I keep the light a little red and yellow, but when I know that red crosses that 200, I know there's a golden cross or a duck cross.
Okay, and the lavender is what?
Which one? You mean this?
Yeah.
This normally don't be on my chart, but that's the 100.
Okay, so then that would make sense where your blue is and your green,
The blue,
that
this the
kind of
5.
area, that's where mine is, and then my 200 be way up there. So it's supposed to be like that because I don't have the ones in between. So, okay, that makes sense to me. Thank you.
What were you saying?
So,
He about to go over his entry right now on how he enters. Which I know everybody want to know. Where do you enter to ride these waves?
Well, I actually enter on a 1 and
hey,
2, 3 minute. But if I was on this time frame right here, I can enter on different time frames. So it all depends. If I was on this time frame right here, I'll be looking right now. Right now, I would have got in.
So it just closed above.
So SJ, so you got in based on this particular time frame, based on the fact that the price actually went above the 50.
I was watching this whole section over here, how we're
Yeah.
right here, then how
higher
it's a
low.
block right here.
Mm-hmm.
Then my EMAs was sitting up. I was looking at my RSI getting ready to cross up.
Mm-hmm.
I got in a little too early, but
It's okay.
I think this is a liquidity grab.
so SJ,
Hmm?
how many times do you feel like you missed the move? So like you get some pretty good entries when it coming back into the order blocks and things like that. So in your trading style, to ensure that you get that best entry, is there times to where you feel like you miss a move and you just let it go, or based on your strategy you're gonna find a way to get in?
Sometimes it all depends on the situation. Like there was that one drop that happened the other day. While everybody was watching the drop in that drop coming down, I was like, dang, I missed it. I was like, I missed it. And I was like, you know what? I said, you know what? I'm not even going to get in it. I sat there and waited to catch the reversal. And I purposely caught the reversal to ride it. That drop that happened the other day, I caught the upside.
Yep, I know
So
what you're talking
I
about.
waited for that. I waited for that moment since I missed the drop. I could have got in it and still got a couple of ticks, a couple of hundred ticks, because everybody that was next to me, they was still getting 100, 200 ticks. But I just let it drop. I just said, you know what? Let it drop. Yes, I missed the drop. Okay, cool. Let me focus on the turnaround because I knew it was so long that it can, you know what I mean, turn around. But when it turned around, it pretty much gave a V-shaped recovery that took back everything that it dropped.
Mm-hmm.
That pretty much happened yesterday as well, almost. It wasn't a V
Yeah.
shape, but it was. When I get on these charts, I'm gonna break it down for y'all. Yesterday, like that was crazy. But
So
look at this.
is that a bear flag? I mean, the bull flag?
It's a
And
tight
with that-
consolidation. The bull flags usually go kind of like in a diagonal
Okay.
consolidation, but this you can put it as a square flag, you know what I mean? Like a pole and a cross, but this is consolidation, looking for a consolidation breakout.
No. Hold on, because I'm gonna pause it right quick because this is trying to see why I don't show ticks. Where can I show this tick? Turn this to ticks. Is
Okay,
that in
go
settings?
yeah, right there. Yep, right there. Trading and change it. Why is it? It says ticks.
That's what I'm saying.
I guess on the thing it always shows you money. That doesn't make sense.
Yeah, and back testing.
On back testing, it only shows money. All right, we're gonna divide it by 5. Let's do it because you got one contract on, and that's one contract. So y'all saw what he got in. One contract he has now at 5,730. Let's do the math. 5,730 divided by
1,200
5.
ticks.
1,200, 1146. Wow.
Nice. Well, yeah, 1189.
That's crazy.
So SJ,
Hmm.
you get the cross, right? Are you going to, when you get the cross, I know it depends on timing and that type of stuff. Are you getting the cross and maybe waiting for a pullback before you get in, or are you getting on the, green take out red situation all the time?
Well, when I see the cross setting up on the higher time frame, I'm already on a lower time frame, so I just follow my EMAs on the lower time frame that allow me to take me to that point.
I got you. Yep.
Like honestly, even though the cross happened right here, I might have been in right here.
You more than likely would have been.
because you already had a cross on a lower time frame. You already see you got a zone on wait. That was a nice support area, nice block. Now you go down to your lower time frames. It's a good possibility that that's going to reverse right there off of support. So when you go down to your lower time frame, you're going to see the play playing out, going up. You're going to have EMA crossovers going up on the 5 minute, on the 3 minute, on the 2 minute. Matter of fact, SJ, go back to that block right there where that big red candle is right there, and then go down.
Right here?
Nah. To your right. With in the blue. Yeah, in the blue area down the bottom, right in there. So what time is that? 10:40. So if you go down to like your 3 minute around 10:40, you're gonna start seeing it play out to the upside.
Right. Because where I see my issue sometimes is I'll get in on a cross and then, you give it, then you got too much room coming back to the order block. And it's
Right
like,
here.
man, if I waited, yep. Mm-hmm.
Matter of fact,
look how your RSI is already crossing up.
I just realized that.
You see what I'm saying? Your
Y'all
RSI.
something?
Yeah, what's up?
Y'all want to see something?
Show us.
That was the actual trade that he was in probably one of the days.
It was.
No,
way.
I'd be watching. Mm-hmm.
That's hilarious.
Just trying to perfect that entry.
See it?
Yep. Mm-hmm.
Yep.
Yeah.
I see it. And this is a real trade,
3
guys.
minutes.
And that's on a 3 minute?
Yeah.
Okay. Y'all see it. That's live, y'all. That was what he posted at 12:32 p.m. yesterday on Friday, February 2nd, you can see his tick count on the right, 1,045 ticks. And he's pointing to exactly where he entered, and it shows you where you entered.
Mm-hmm.
And as y'all can see, he rolled the wave. He caught it down there at the support, caught his cross, or when he saw it, perfect timing for him, and played it up.
So what I'm seeing is if we're over here scalping and we're trading on the 1, the 3, or 5 or whatnot, it won't technically show up as like an order block or support if you're on that lower time frame. But going back to that 30-minute, you had that as support of 30-minute, maybe a couple hours ago.
Mm-hmm.
So knowing that that's a level, that's a level of interest. So you really paying attention on the 1 and the 3 as it comes back down there.
Exactly.
Yeah, but
Look
when
to
it
the
came
left.
down right here, you can see it. It made support right here.
Mm-hmm.
And it probably was like I use the MACD. It probably was like a bullish divergence at support down on that level, showing you that it's a high possibility it's going to go up. So those things are the little edges I was talking about, multiple edges. His RSI was probably turned up. It was, matter of fact, we looked at it. It was turned up after at it being support. So now you have 2 confirmations, 3 confirmations that this thing is a high likelihood to start pushing up. So you're getting it on a lower time frame based on what you've seen on a higher time frame, because that's how you know it was support. Looking to the left on your higher time frame. Now you're already ready to rock and roll when it gets down there and it starts to do certain things.
Right.
Woohoo! Magical. Magically delicious.
This is the discount zone. And what it does from every block also, there's different blocks and different time frame. This was the discount zone. It took it back up to the premium zone. Every time frame it travels in the block. Just got to establish where you are in the block. You don't want to be in the middle because that's when you got to jump in and jump out and jump in and jump out. So the best trades is always establish where you are in the block. Rather, every time frame has its own block, especially for those of y'all who use smart money concept. There's a block. You resume your thing, and this is the 3-minute. So you can see the block is from here to here. Every time frame is a different block. And that's for y'all who use smart money concept. I don't use smart money concept. I have something else. But it's better than I think it's better than smart money concept. It's a little cleaner. But for the ones who use smart money concept, every time frame has a block. Found out where you are in that block and just try to play from top to bottom in the equilibrium. Everything's going to either try to get to the equilibrium or push your way to the equilibrium.
I want to add on to that real quick, SJ. Now, like you said, find where you are in the block, right? Now, sometimes, like you said, you don't want to play in the middle when it's consolidating. But if you can see how his EMAs are rising up, right? And you already know we're going to a premium zone. You have to find out where that premium zone is. You can still play the color change and get in on the rest of the ride. You may not got in from the bottom to the top, but you can get in the middle once it's trending. Right? You see the EMAs are all pointing up, they're all on top of each other. Now you can say, like, sometimes I like to catch the red candles in themselves. And the red candle catches one of them EMAs. Okay, cool. I think I got it at the bottom. I can still use my $100 stop loss underneath it, because if it cracks those EMAs, it's a high likelihood we're going to possibly be reversing or going down. So I'll take the $100 loss because I want to try to get to that premium at the top. So if I'm in the middle, like I'm looking at like that one of them red candles in the middle of your vibe, I can wait till a green take out the red, or I can play like one of them red ones touching the green candle. You see what I'm saying? I mean, the green line, and I can get in knowing because I have an idea of where it's going. And that was one of the troubles I used to have. That's why I love the green takeout red, because no matter where it is, as long as it's above those EMAs, I can get a green takeout red, and I should be able to flow with the rest of the trick. I'm already in the middle of I'm just flowing with the river at that point. wherever it's going. And now we know where it's likely to go. I can say, yo, this could be a good 3-to-1 ratio. I can get some nice change. I can use the ruler to see how much ticks I'm possibly looking at. I already know what I'm risking. So now I can see where I'm possibly going, and I could just trail behind it. This is beautiful. But like you said, know where you at in the block.
Yeah, that's like, and for those of y'all who do use EMA crosses, when, let's see, this is what I believe when a lot of people do when they had, say my EMA cross is the 1348, which is the green and yellow. It crossed about right here. This is a bad example, but I'm just going to just say it still went up. Normally when people play cross strategies, they see they cross strategies, they ride it up, take that pop. Then they get out. But if you pay attention to your cross strategy, even when you back test it, as long as it doesn't uncross, it's going to push up. Like most people, like I said, would have been out of here. It did come back and retrace. Probably would have been out of this. You know what I mean? If I was coming in, yeah, I probably would have been out of this. But it's other times on other time frames that I can probably show you where that doesn't happen. But most people say that this was the cross right here. Most people would have took this, got out right here, especially when they start to see retracement. But as you can see, the cross, the yellow is right here, wide open, and the green, yes, it came back to retest the EMA, but it bounced back to continue up.
And that's funny because that's usually what happens almost every time. You get that pop and then you get that retracement. That's why I usually just wait for the retracement. I tell people you can take the EMA cross if you want to, but I'm recording.
Yeah, so a lot of people, like I said, it would get out, but it's always going to give you a retest, point blank. And for some of y'all that got fast EMAs, the 5, the 6, or the 7, the 8, or the 9, always remember this. Anytime your candles get too far away from the EMA, it will retrace. That's what it's going to do. It's going to retrace. Anytime, if you use any one of the fast EMAs, the 5, the 6, or the 7, I don't really want to say the 8, but I can say the 8 and 9. But anytime you see that EMA on a smaller time frame, too far away from the candles, it's coming back. It's either two things that's going to happen. That EMA is going to have to hurry up to that candle, or it's coming back. So you can always look for that to be a strong possible retracement, especially if you're sniping.
Yep, let's call reversion back to the mean. It's gonna come back. Price action always come back to them EMAs.
So SJ, one more question. So you've been making a lot of money on the upside move. You know, we've been trending, right? Do your crossover strategy or how you think about the blocks, do you switch any thought process when it comes into taking an upside trend versus a downside trend?
Nah, I do the same thing. I follow my EMAs. I trust my EMAs. So once I'm in a trade, I'm always watching my EMAs on the 1 and the 2 minute. If I'm going up, I'm watching my EMAs go up until my EMAs recross to the opposite direction on the 1 and the 2 minute. I'm still riding the trend. For example, right here, I would have got in right here. I would have rolled all of this all the way up. I could have got out here, but no, right here, I would have had to make the decision right here. Is where I would have said, okay, it's time to get out. If I was sniping. Now let me see how many ticks that would have been. 174.
Sounds like a good day to me. That's about $600-700.
And this is on the 1 minute.
And that's on the 1 minute from 3:19 to 4. So in 1 hour, from 3:19 a.m. to 4. Now them times always be good for NQ. Now would you have taken it down once you had the cross back down?
Now, if I was taking it down, here it go right here. I would
Mm-hmm.
have caught it right here and rode it to about. Now look, remember what I said to you before? When the candles and the EMAs don't come back to the candles, see the candles down here? That EMA didn't follow it. I knew it was coming back.
And it's touching the band zone.
Yeah, this is what I was talking about, right? When I said when the candles don't, when the EMA, I have a 5 EMA. That 5 did not follow that candle. It stayed up there. So I know the candle's going to come back to him. Same example right here.
And if you want to play
When the
reversals, those are not bad entries.
when the 5 EMA, the 6 EMA, 7 AM do not follow the candle, that candle is coming back. I used to watch, like Steve say, Oliver Velez videos, and he used to always talk about the 200 and the 20, 220, 220, to the point where I understood how he was relating to the 220. So the same concept that he added, how he talked about the 200 and is the same concept I use. I applied that to my other EMAs, and yeah, let's see. I see it here.
And the same thing happens to your bigger time frames too. Like your 13
Yeah,
and such. Once it starts getting away from it, it's going to come back.
100 ticks.
It's $500.
This me sniping. I respect my EMAs and the trend. So I know how everybody else used the short position and they did the 2-to-1 and all of that. That's why I say I don't go by that. I'm not like kind of technical. I'm gonna ride the wave of the trend until my EMAs tell me else. So I can't say that for everybody else. That's the one thing I can't tell nobody what to do and how. I mean, like how they're gonna have to decide that within themselves, what they willing to lose to get it, and what they want. Maybe they may not want that whole 100 ticks. Maybe you only want 20, 30, 40, 50 ticks. That's cool. But you see how my EMAs allow me to get that with something simple.
Absolutely. Absolutely. Thank you so much, SJ. Running them EMAs. I used to be telling y'all the 6 or 7 T cross, wait till he cross back over. Some of them plays gonna be something vicious. But SJ is phenomenal in using multiple time frames to pinpoint his entries and then write it longer. Phenomenal. Phenomenal. I love
Thank
it.
you, SJ. Can I ask a quick question?
Yeah,
How often do you establish your blocks? Is it weekly, like you do it on Sunday nights, or do you do it daily, or every time you trade?
Nah, my blocks is they already show up on my computer.
Are you using a script to establish them?
You can use Smart Money Concept. The indicator that I have, it was a free indicator, and I think Smart Money Concept, because they came out first, must have said something, but they took the indicator I got off the market. Can't find it nowhere, and I tried to copy it so I could give it to people, but it won't allow me. The only reason why I still have it because I saved it, but anybody who had it that erased it is gone.
Mm, thank you.
So yeah, and this not the indicator right here. Is the other one. Here's my other indicator. It's I use a lot of people use smart money. I got an indicator that's called price action.
And this is a
And
good
it's
time. Go ahead.
yeah, you go ahead.
No, I was gonna say this is a good time to say that cheat code. If you do have the cheat code algo, they do have the order blocks on there as well on the V5 version. That puts that on your screen as well. Gotta throw in the plug for the fam.
If you want a shortcut way to look for your order blocks too, mark off 1:30 p.m. to 4 p.m., the high and the low of that session, and then also 2 a.m. to 5 a.m. Those are the kill zones and the high and the low of the London and the New York kill zones. Price is attracted to those all day long.
Thank you so much.
You're welcome.
Yeah, basically it's the premium and discount zone and the equilibrium, but for every time frame, there's a different block. For day traders, like I said, you can see the whole block of the day in the 30-minute. And that's the reason why I start off with the 30-minute. I don't, unless I'm swing trading, and that would be it's going with options. That's when I use the hour and all everything else. But as far as day trading, you only need the 30-minute and under. The 30-minute shows you the pretty much the board of what's going to go on for the day. And the smaller time frames, whether it's the 15 or whatever time frame you is, those are other time frames that you can use. But if you want to see the bigger picture, it's in the 30-minute block. And you just play the direction, whether it's up or down.
Fire, fire, fire. I love it. You guys enjoying that?
This is gold right here, bro.
Thank y'all for making me record it.
Thank you for recording it too.
Yeah, I'm definitely gonna put it on my YouTube. Y'all can go watch it. I'll get it saved up and get it linked out. You got anything else, SJ? Or you good?
No, that was it. Just
Man.
trust your process and trust your strategy. Like I said, all of y'all strategy works. Y'all just gotta trust in it. And another thing I want to say to y'all is another reason why I say I'm not a technical trader. And I try not to think outside the box. This market, I believe, is rigged. And because all the professionals, they don't trade no more. They use Mr. Algo. Mr. Algo knows all the technical and all the rules and all. He knows the playbook by heart. I believe also another thing we got to do is we got to pay attention to the manipulation of the market because he knows the playbook. They like to fake us out sometimes. So always keep that in mind. Like sometimes y'all may hear me when we all on the floor together, and I may be with y'all too. When I see that we all thinking alike, I don't like that. That means everybody's saying the same thing. You know, and I believe the algo know we seeing the same thing. Sometimes at those particular moments, that's when I'll try to think up the way I think. And that's when I'll try to prepare myself from the upside. Even though we see the downside, I'm preparing myself for the upside. I may be playing the downside too, but I'm preparing myself for the upside because That's when I believe the most they be trying to get us.
Absolutely.
That's why you get them gap plays where you say, oh, it's a gap. What they do, they may give you a gap rejection, or they may take it in the gap a little bit and come right back out. And then the third attempt or the fourth attempt, that's when they take it all the way up. But by that third or the fourth attempt, you already done made your try. So you probably, if you didn't stay in long enough and had the patience to wait, you was gonna close that trade out.
You know, it's funny as you say that. I'm gonna show something on Friday's price action that showed just that, where they played and played and played at the supply zone a couple times, and then it went broke through it. And like you said, by that time, everybody thinking, all right, this thing is going down. They done hit it 3 times. This is a supply zone. This is over. It's going down. And then 'cause that's what I thought. And then what it do? Boom, breakout and went crazy.
Yeah, but like they like playing with our minds because the algo has one thing that we don't, no emotions.
It just knows levels. And that's the fun part, because when you know that, then you can see where the levels are and play those levels. And that's basically the same thing as saying where's big money, because who trades the algos? People train the algos on where they want it to do, on what they wanted to do. So that means now we have a computer-based system of where big money is taking their money in, taking their money out. When we know that, because we have these supply and demand zones, we can get in with the big money and get all and get with it and ride the wave. And the EMAs,
Can I chime in real quick?
absolutely.
Listen, I find it hilarious. I was talking to somebody earlier, and I think might have been you, Steve. It's funny that we call wicks now, when back in the days they used to call them shadows. And if you think about it, these are the fingerprints of what the market is trying to do based on these bounces and everything else. So yes, the algorithm is there and it can affect it, but numbers don't lie. People do. So when you, like SJ says, the machine's operating off of no emotion. If you can find a way to put your emotion away and you can read the chart for what it's saying, and you read the wicks, you read the shadows, you read the levels, you read the points, it's going to dictate what the potential direction is going to be. Our goal is for high probability trades, not to be right or wrong. So no matter how you look at this or whatever the case may be, whatever your strategy is, just make sure that at the end of the day, did you give yourself a high probability from your back testing, your studying? You know, SJ just gave some real good dimes just right here on just how to use an EMA crossover as well. Put it all together and just build your strategy. Your strategy is not wrong, it's the execution that comes into play, and that's what SJ was pointing out.
Fantastic, fantastic. All right,
Hey,
SJ, what
SJ?
time is it? Well, go ahead.
Uh-huh.
You got a question for SJ?
Yeah, and this is to you, Steve, or Jeff as well. But SJ, I was thinking about this before we started the segment and just decided to sit on my hands, and because I figured it would come up. SJ, you made reference to, for example, if you're doing an Apex eval and you pass the eval, flip over into a performance account, and then at some point in time you find yourself blowing the account because of the trailing threshold, the drawdown requirements in there. And what I found fascinating through your overview was that you didn't necessarily experience the blowouts while you were in the eval stage as compared to when you were actually in the performance account stage. Because it seemed to me, through my logic anyway, which I've yet to pass my first eval, but it seemed like that approach that you have would lend itself to be more problematic in the eval stage as compared to the performance account stage. So I was curious what adjustments did you find yourself making in order to be more consistent to get to avoid blowing an account once you were able to effectively convert from eval to performance, and or how you managed to avoid blowing an eval period, if it was more so based on how you sized your positions or what, if that makes sense.
It was how I sized my account. At first I was going, when I first was going doing it, I was doing like 250, 200, like 200 ticks, 250 like a day. That was what I was doing averagely. And I would get to my account in like a couple of days, I would pass my account. But I started seeing other people, it felt easy, it started feeling easy to me. Instead of me sticking to the script, I'm starting to seeing other people around me with 4, 5, 6, 7 contracts. Me thinking like, oh, okay, cool. I need to do that too. And I can make more money. So when I switched up my style, trying to buy all these extra contracts, I noticed the drawdown would hit me. Bang. Oh, I can't trade like how I normal trade because the drawdown with having all these extra contracts. Before a drawdown with one contract, that ain't about nothing. 1 or 2 contracts ain't about nothing. But now I got like 6, 7, 8 contracts. The drawdown to that's all them contracts together. That's what was killing me. So I had to slow it down and go back down to 1 or 2 contracts.
Makes sense. Totally.
Makes a ton of sense. And then did you also tighten up your entries, or you left the entries exactly what you was doing before? It's just the contract size.
Oh, I left my entries exactly the same thing. It was just I couldn't
withstand those
buy
contracts.
the other contracts.
It makes sense.
Now, if I'm sniping, and I know then it's a whole different story. But if I'm trying to ride the trend, I can't do that.
Right.
So you got to know what you're trying to do. Like I said, a lot of y'all are snipers, so y'all can go in, get y'all 20, 30, 40, 50 ticks, whatever, 100 ticks, and get out, or whatever the number it may be. Me, I'm trying to ride the wave until the wave is broken. And I snipe on the side as well. Like I got like 3 phones that I keep to me. So sometimes I'm riding the trend, but on top of me riding the trend, I got like 3 counts, 1 with Top Step and 2 with Apex. I only trade oil and Top Step. So I do all my CL and Top Step. And then with my 2 Apex accounts, I may ride the trend with one, and then the other one, if I'm trading, I'm sniping.
And what I've noticed,
and I tried to have more I had more accounts than that. I had like 6, 7, 8 accounts at one point. I couldn't manage those accounts, and I didn't have a trade copier. So now, and then I blew those accounts, trying to juggle and maintain and trade all those accounts. I end up blowing them. So now I only got 3 accounts, and I just try to keep those accounts cool.
and what I've noticed is if it's a 50K account and you get above, and it's a performance account, and you get above that trailing threshold requirement and build yourself a cushion, at that point, that threshold goes away. And you can afford, it seems to me, you can afford to
now
comfortable in riding.
Now I can. But at first, when I first started, I couldn't. But now I'm cool.
Yeah.
And I just maintain, and now I just maintain my accounts that I got now and just keep it moving. But my goal now is to actually fund myself. And I'm trying to do that now. That's my next goal, is to fund myself and use my own money instead of using Apex and Top Steps. So I'm building myself up with consistency, trying to make sure that I'm cool. But my next goal is to fund myself, so
Yeah.
I can be able to pull out when I want and not wait a couple of days to, just pull out.
Yeah, I actually just found out, SJ, you just need like $100, $150 for trade, so you can trade micros.
Just
Yeah, for your
$100.
I'm
matrix.
literally doing micro. Yeah, I think it's $150. So I told myself I was going to do a little bit of a challenge. I might toy with that a little bit to see if I can build that all the way up to like $1,000 and then 10,000. So that's one of my next goals.
And that's not bad, because even if you start with $1,000, doing like $100 loss on that's 10%, which is crazy.
Mhm.
But if you started with 10,000, then 1-2% won't be bad. Yeah.
It won't be bad, exactly. So I'm looking into it. I'll probably update y'all towards the end of February.
But I'm still gonna use they money until I get to double it, like that 50.
Oh yeah, absolutely. It's nothing's cheaper than using their money to get past the eval, get funded, and get the money out.
Get the money out and then go get your own account. It makes sense, because it's one, you get 100% of your own money, and then like SJ said, you can pull it out whenever you feel like it. You have it in your account.
Yeah, but remember though, when it comes to risk management, know what your number is and know what your average is. Start with whatever your average is, your average tick count. Everybody need to know their average tick count.
And
What is the typical amount of ticks that when you get in a trade, what is the typical amount of trade ticks that you get on your entry?
And one thing
If
that's
you
gonna
don't
help you
know
with
that, if you don't know that, you need to figure that out.
Yeah, and one way you're gonna figure it out is by knowing what time you trade, because the tick counts differ depending on the time of day, right? Because one way you can find that out is by using the ATR. So by using the ATR as an indicator, and I'll just put it on for a quick second to see where we at, because trading at 4, 5, 6 o'clock in the morning, those tick moves are the same exact trade. Those tick moves are different than 9:30, 10 o'clock, 11 o'clock in the morning. So depending on if you trade between 8 and 11, or let's just say 9:30 and 11, you got to know that those ticks move faster. The same exact trade that you would do at maybe say 10 o'clock at night, those trades are going to move faster. So when you can figure that out, like he said, then you can say how much of okay, if I do this, I'm usually making at least per move 100 ticks, 200 ticks, 50 ticks. Now you can start making the proper movements, like SJ's saying.
Yeah, that way you can start counting and adding it up. How many ticks do you want a day?
Mm-hmm.
And how many days you trying to get those ticks? So once you know that, then you can go from there and start building up to where you want to go. Today, maybe 20 ticks. Tomorrow, maybe 50. Then 200. Then you work your way up. You grow with yourself. As you're growing, make sure you're doing everything you need to do to have your account grow with you. So everybody is different. That's one thing when it comes down to risk management. Everybody sit there and say one thing and another, but it all boils down to that person. It ain't got nothing, because everybody think about money and look at money a certain different way. That's even like when the compound challenge. I tell people with the compound challenge, yes, you're going for 20% a day, but there's going to come a point where you're going to grow your capital to a certain point, and then especially using full port, you're going to be nervous about putting that capital up for just 20%. Your number, you may not have hit your number yet, but it's going to come to a point when you're going to get, maybe you got the 10,000 or more, it doesn't matter. Say you got the 10,000. Now you sitting here at full port, like I gotta get 20% and I got 10,000. Do I want to put this whole 10,000 on there? And like I said, but 20% of 10,000, that's that's a couple dollars. That's $2,000.
Yep. That's crazy.
So it's $2,000. And sometimes 10 to 20%, you can get that in a matter of a couple of minutes. But it's going to be, like I said, it's going to be a moment when you're going to have to face, basically, a lot of you face your fears. I had to face mine. And when I did, it wasn't until I actually faced it is when I overcame it. And I think it was only because I had somebody else that was like in my background pushing me. So I was trying to be accountable for, what I said I was doing. But everybody's going to have that moment and that mark they're going to come to. And the numbers are going to be varied from different people. The mindset is a lot too. We're going to have to all condition our mind. That's in certain type of ways. Like I said before, if you can't manage 1,000 or 2,000 or 5,000 or 10,000 in your life now, how you going to manage it when you really get money? You can say what you want to do, but it ain't going to be what you want it to be if you can't even manage stuff now. So risk management is just important in life general, not just trading, life general. And it took me until last year to find that out. It was funny because I had risk management growing up. When I was growing up, I used to write everything, calculate everything I did, wrote it down. I did that with my finances, but when it came to trading, I didn't do that. It was just like, okay, I made a couple dollars, and then I may have lost a couple dollars, made a couple dollars, but I wasn't really going nowhere. I was going somewhere slowly, but not how I should have been.
Because at this point, you got to make it mechanical, correct?
Yeah. And I discovered that last year. And I've been trading for a minute.
Yeah. It takes time. And people think it's gonna come in and just start making a whole bunch of money because they see other people making money and don't know that their backstory is real. Like they've been through it in some years. Some people go through it. Some people get it 2 years. They get coaches and be good in a year or two and be good to go 3, 4 years. Some people struggle for years upon years before they really get it because you got to think different. You have to focus on risk management. And that's a lot of things that people don't just focus on, so it's important, super important. JC, I think he just was like, he was asking what kind of struggles that you used to go through with your risk management. Like he pretty much said he didn't have any. Just make a couple of dollars, lose a couple of dollars, and say, okay.
Yeah, like I said, I was making a couple of dollars. That's just like the story of, I'm gonna say the story of what happened with me. Before I came to Cheat Code, I was trading. I was an option trader before I came to Cheat Code. I was trading off of news, stuff that I hear, and I was making money. So I kind of consider myself as an option trader. I ran across other people that was option traders, and they used to come to me all the time like, yeah, you option trade? And I'd be like, yeah, I option trade. I showed my portfolio. And then they used to always say to me, well, what the charts say. At that particular time, I didn't know how to read charts. So I wasn't worried about it. I wasn't paying no mind to them like what the charts say. I was making money. So I wasn't hearing that. I was making money. I was barely losing, and I was just doing that off the news. It came to one play that I had did TSM. I had a call that I brought for $150, turned to $50,000. I was happy. Biggest trade I ever did. Got cocky. I got cocky, started thinking that I was not mean this, that, and the third. So now I got $50,000. I ain't had that type of money. I ain't know what I mean. All I kept saying is now I got $50,000. Now I can trade and do all the things that I wanted to do. Cause you know they always say the more capital, you know what I mean, the more capital you got, the better, you know what I mean? I'm like, okay, cool. So that same 50K, I started playing around with SPY XPX, lost that money within almost 3 weeks. Had to hear that same person. I went back, he asked me about, he said to me what the chart said. I got pissed off. But he was right. If I knew what the chart said, none of that would have happened to me. So I stayed consistent with trading because I sat there and said, I made $50,000 without knowing how to trade and without knowing how to read the charts and all that. Just imagine if I did know how to learn how to read the charts. I think I seen Quay and them on Earning Leisure talking about the algo and all that. I joined Cheat Code. I started learning how to read the charts between everybody that was here. And I mean, still was learning on my own, but you know, just hearing, I was like a fly on the wall, listening to everybody, taking in. We had, at this particular time, we had a whole bunch of people here at that time. It was a lot of more teachers but I was learning from them all. Still trading. But like I said, it was risk management that basically turned my everything around for me. And as you can see, when I say I lost that 50K, I didn't have risk management. All I thought was, I got 50. I can make something with that. And you see, I lost it, not having proper risk management and not knowing how to fully trade. I learned a valuable lesson that humbled me to this day.
Hey, SJ, I got a good friend who went through that same thing. He made about 65, 70,000 trading options, not knowing no charts, just trading straight news. Went in on Tesla hard one morning and woke up to all zeros.
Yeah, that
And
jump be crazy.
now he don't have a spunk. You know what I'm saying? To learn what you're talking about, the charts and the risk management. He think he can still even paper trading, just going, he's still trading the same way. I'm like, that was cool that you did that, but man, it's a whole different, you could even do better. Imagine what you did without knowing, what you need to know.
Yeah,
But
that
yeah,
becomes a make it and break it moment for a lot of people.
Yeah, it do. I could imagine. I mean, I've lost a lot, but I ain't lost that. But it felt like that.
And
Yeah,
and
that
it
can
goes
become a
back.
make it or break it moment because at that moment it could have broke me. I was mad. I was hurt. But I looked at the bigger picture. I looked at the bigger
Oh,
picture
she in
and
the
I was like,
bedroom
I made
watching the
money
movie.
without knowing nothing.
Sonny.
So I pretty much was blind. Gambling. That's what I was out there doing, gambling.
And a lot of us that's definitely gone through that because you learn the risk reward, and some people just don't follow it because there's nobody over your shoulder. Like you said, you had that gentleman, your partner who was like, "Yo, what's the chart saying?" Like, you got to watch some charts, and that's what I like. One of my homeboys, I had to do it in the same way. Like, yo, you got to learn to read these charts and see what the market itself is doing. The news is great, and you can make some money and get lucky, but until you learn risk management and how to read these charts and get your mindset right, it don't even make it. It don't make no sense Because some people, like you said, it'll be a make it or break it moment. They get lucky, and you make that 70K. You be like, man, how you lose all that? Because what happened was he tried to put it back on there and make that 70K turn into $1 million. Instead of saying, okay, I made the 70K. That's crazy. Instead of me putting the whole 70K back on, or 20K, or even 10K, let me throw another 200-300 at it. That 70K, it might have stretched them out a little bit. But I'm like, all right,
Right.
I'm losing a little bit of this money. I just lost maybe out of the 70K, just keep playing the way he's playing, and maybe using $1,000 here and there, would have lost maybe 20 of that, and be like, hold on. I'm starting to lose this good money. I probably need to learn a little something more. But some people, it really destroys them. Like, they'll make some good money, and then they see it all gone. Then they really be like, this joint is just gambling for real. You can't make no real money in here. But they know it's possible because they did it. But it's like anything else, man. You have to put in the work and keep going, keep that studying. You know what I mean? You're not gonna be a doctor after just doing 1 year of doing stitches. You can't do no major surgery because you know how to put in a couple of stitches. You gotta go put in that work and learn from other people who are doing it. I'm always learning. I'm reading books right now on supply and demand. I know it, but I'm learning from people who like really, really know it, and learning some extra stuff so that I can come back and do it and then show it to y'all. You know what I mean? So thank you, SJ, man. Man, we went in longer than I even wanted to, but I love it. This is phenomenal. And I'm gonna do my part here next. Probably stay on for maybe another half hour. But I'm gonna do that on another recording, so that'll be a separate video. But everybody, listen, this is the kind of conversations we be having on a regular, showing our charts, doing our thing. And here at Cheat Code, you can definitely come in, and we do live trading floors. Me, myself, Screener Steve, and my partners Jeff, Neo, Coach Amy. Got a whole bunch of coaches here that do stock options, futures, crypto. So you come on in for free and get some of this knowledge that we have, that we are sharing over here for free. Be a part of the team, and we all get money together. So on the next time, till next time rather, we will see y'all. I'm gonna do another video here, so you probably can see that one next. All right. Click the like button, subscribe. Come on over to join the Cheat Code. The link will be in down below. All right. Talk to y'all later.